How do you see today shaping up? What's your Wex word of the day?
Look, I think the word that we're choosing is Goldilocks, and I think that there are so many people out there who don't realize how well we've done this kind of triangle of tension as we've talked about, and this triangle of tension is that need to balance inflation, GDP growth, and interest rates. And I think we've kind of got it just right. And you do have days like this where the market does sell off because people like to almost be the negative person in the room. But if you come to a party and you're waiting for it to be over, you're going to miss the fun in the interim. And in this case, you're going to miss a lot of returns because you're waiting for the market to go down.
All right, so you say if you're waiting for the party to be over or turn bad, you're going to miss out on something. What area would you be in right now if you don't want to miss the party?
Look, I think that there is another thing that we need to really talk about, and it just relates to trading this market during this year because we're in a really unique year. We have a lot of political tension, not just in the United States, but globally. In the United States, however, going into an election, you have rising uncertainty, and with valuations where they are, you're likely to have that uncertainty lead to a sell-off. So in that situation in the U.S., you want to either avoid sectors which have very binary outcomes, and you want to go into sectors where it's good either way. And in that case, we're looking at the defense sector. Now, the reason that the defense sector hasn't been such a strong performer is because you've had that hold up in appropriations. But if we look at it, if we go through the election cycle, we have some level of resolution. We do think that the setup for defense is very strong going into next year. So it's one of those sectors that benefits regardless of who wins the White House.
All right, so that's the one sector that you believe benefits either way, but there's some other areas that you say are more sensitive. One of them is alternative energy.
Exactly. And what do we have there? We have a situation where Democrats have come out a lot in favor of alternative energy platforms. And you do have a risk if there is a change that those stocks are not fully pricing it in, particularly as we get closer and closer to the election outcome and that uncertainty gets more and more certain, gets more and more close, I suppose is the way to look at it. So we're not as bullish on those names, and we do see political risk. But look, I've also been a global investor my entire life, Frank, and one of the areas where I think in the United States we've been so focused on the fact that the economic outlook has been positive. In other parts of the world, we're just coming out of a recession, and there's some really good opportunities as well internationally.
All right, I want to go back to your triangle of tension thesis. Let's talk about traditional energy for a minute. Right now, we're looking at WTI, the U.S. benchmark, over $85 a barrel. Right now, at about $85.30 a barrel. You mentioned you're a global investor. As we continue to see these oil prices rise, how does that impact your thesis about what sectors to invest in, not only here in the U.S., but globally?
Okay, if I take a look at the oil price outlook, I think, yes, it's very good for oil companies and those traditional oil companies, but they're still also needing to transition away off this kind of golden goose, which has been high oil prices. So those cash flows, they're returning to shareholders. That makes it a very attractive setup going into those types of names. In the rest of the world, I think that the high oil prices are not going to stall a recovery because a lot of these companies have spent the last year trying to reduce their dependency on energy, be it oil or different types of energy. So I think the setups for corporate profits are good, and PMI numbers are supporting that.